With the increasing popularity of people investing their own money in financial markets, either be it through stocks or crypto, many of you have asked the question now if earning the CFA charter helps make your own stock picks. We all know that the CFA charter can be extremely beneficial for a career in finance and with many other things, but basically the question is, can I use what I learned in this program to help myself make more money with my individual investments? In general, the answer is no. I do not believe that passing the level 3 CFA exam and earning the CFA charter is going to benefit you that much in your individual investment making or stock picks. However, when the CFA charter is paired with maybe years and years of relevant experience in picking stocks for different reasons, then I do think it can be helpful in making better investment decisions. Just don't think you can pass level 3 and then start your own stock tips Discord server and make 20 grand a month of passive income or something like that. It's not gonna happen. In this video, we're gonna talk about why the CFA charter probably is not a golden ticket towards your own personal stock picks, but why the information learned throughout the program can be helpful in informing better investment decisions. I'll cover the things that I think are the most important in a person's ability to make the best stock picks out there, and the overlap that the CFA program can provide to complement that set of skills to hopefully aid in making better stock picks. Then at the end of the video, I'll tell you how I personally choose the stocks that I invest in. There are various ways that people will summarize investment decisions. For the purposes of this video, we're just gonna say there's a qualitative factor to every stock pick and a quantitative factor to every stock pick. And the factor that's relevant for this conversation, because it's the one that the information throughout the CFA program could potentially improve on your abilities to do effectively, is the quantitative factors. Before we get into exactly what I mean by that, let's first knock the qualitative factors out of the way. Those are things like picking a stock because you see a ton of people using a certain product, or you see a growing popularity of a certain trend or movement throughout a society that you know a company or a few companies that could benefit from. Some classic examples I've heard other investment managers talk about are people buying more and more Starbucks coffee 10 years ago and talking about how great the product was, so they chose to buy Starbucks stock. That decision was primarily motivated by qualitative factors, being they saw people drinking a lot of the stuff. Another one could be something like a certain country or geography where a metal or ore is found in the earth, so you quickly buy some mining or some manufacturing companies who are going to be able to harvest or sell that product. Again, the primary motivation of an investment decision like that would be the qualitative factor of more iron ore or whatever it is being found in a region. Neither of those things have to do with the balance sheets or the financial statements of the industry or company within which you're investing in. Sure, most investment managers who are making a stock pick based on qualitative information are gonna wanna know the financials too. They're gonna wanna know the quantitative things, but the point is the quantitative factors are not what led them to make an investment decision. So that category of investing, these qualitative investment decisions, I don't think the CFA program is gonna help you out with whatsoever. That's more of like a trend following or a momentum stock picking strategy, and it definitely works for a lot of people, but those are not the concepts taught by the CFA Institute throughout the 3 levels of the CFA program. The factors that are taught throughout the CFA program are primarily quantitative factors, things that deal with numbers, financial statements, dollars and cents. I'm primarily thinking about the equity, corporate finance, and financial analysis and reporting sections throughout levels 1 and 2 and a little bit of level 3. Those are the 3 books that in my opinion are going to best equip someone for making their own stock picks. But again, the ways that those 3 books will educate someone in making investment decisions on are quantitative. In my opinion, the most important factor in those 3 books that will help with stock picks and the best ways that the CFA program can help you with stock picks is through learning about corporate balance sheets, corporate financial statements, and accounting. And maybe I'm just thinking about this question through the lens of a value investor, which is someone who tries to make stock picks based on the current price of a stock relative to its future expected cash flows discounted at a certain rate, instead of growth-oriented stock picks, which maybe qualitative factors would be more useful with. Tesla could be a great example there. Tesla made no sense from a quantitative, and maybe still makes no sense, some people would argue, from a quantitative perspective, but could make a ton of sense from a qualitative perspective. It's a growth stock. It's done really well for the past 10 years. The last decade of stock market performance in the United States has in general been dominated by these momentum or growth type names. In my opinion though, at some point over the next 5 to 10 years, we will see value investing come back into favor more so than growth, which means that people making investment decisions based on the fundamentals, the economics, and the numbers behind a business's operations and the future cash flows they can generate will be a better strategy. And it's with that investment philosophy that the CFA program can help. So there's sort of one answer to the question. In the way that the market's been operating for the last 10 years, can the CFA program help me? No. But if the market shifts directions and value investing becomes a more prominent growth driver, then can the CFA program help me? Probably more so. However, it's still not going to do everything you need it to do, and that's the second part of my argument here. To make very educated and very effective and profitable stock picks, in my opinion, you need to be an absolute expert, and I mean expert, in a certain company's financial statements, and you need to be a complete expert in all those things for all of the main competitors in the industry for which that business operates in. And it's because of that belief that I and my firm do not often utilize individual stock picks for client portfolios. It's just too hard to do really well. I'm not saying that nobody can do it well though. Active investing does work out really well when the investment manager knows what they're doing. So, if we're saying that accounting principles are the most important factor in analyzing a company's worth and its projected future cash flows, then it's the accounting information taught through the equity and corporate finance, but primarily financial reporting and analysis sections of the CFA program that will aid you in having the information necessary to make the best stock picks. The problem though, is that those 3 books and the entire CFA program just do not contain enough information to do what I would say they would need to do to make someone an effective stock picker out of the box. There is just too much you would have to know about a certain business and how its financial reporting works that the CFA program cannot possibly educate you on. Professional equity analysts will know exactly what I'm talking about here because the way their careers work is they will be assigned to a specific industry, we'll say the construction equipment manufacturing sector, and they will have to become an expert in all of the accounting principles and all of the business growth projections for each company that operates in that sector. When you spend an entire career learning about and talking about every single line item throughout the financial documents of a company or a set of companies in a certain sector, then you really become an expert at spotting little changes and little trends within those financial reporting numbers. But if you're not an expert, you could very easily pull up the last 3 years of financial reports of some company and say,
oh, the revenues are growing and the cash flow from operations are growing. Looks like the business is doing well.
But underneath the hood, there could be a lot going on with acquisitions or how they're reporting income from different business units or things like that. Only the person who's a true expert at that company and at that sector could pick out. So at the beginning of this video, when I said that the information taught throughout the CFA program could aid you in your knowledge base or future understanding of information that you would need to make great stock picks, this is what I'm talking about. You would need to be an expert in a company's financial reports or an industry's financial reports. Using the CFA program as a base to start learning about financial reporting can be a great way to get some introductory information and continue to learn a lot about how those things work. But in my opinion, 3 CFA exams are just not enough to teach you all of the information you would need to have to make the most educated stock picks. Now you could be thinking, hey AJ, you're talking about financial reporting and accounting so much, why wouldn't I just go for the CPA program? And I would actually tell you, in my opinion, that could be as beneficial as the CFA program if you just wanted to be a stock picker. Mentioned it earlier, but picking stocks is not what I use the information taught throughout the CFA program for. I use it for portfolio construction. But if you did just want to be a stock picker, could be that the CPA program might be as beneficial as the CFA program. Now let's get into exactly how I make my own personal stock picks for my massive portfolio. You may have heard about the fact that monkeys throwing rocks or darts or something like that sometimes outperform indexes or many investment managers after accounting for their fees, so I try to adopt a similar strategy. What I do is I pull up my dating profile on Tinder and I swipe left on every person that I see. Then when I get a match, my first question to them is, hey, what stock should I buy? If they try to get flirtatious with me or laugh, haha, or talk to me, or do anything else that isn't giving me the stock that I should be investing in that day, I instantly block them. But when someone does actually give me a stock pick, I instantly put a small portion of my personal portfolio, maybe to the tune of about $1 billion, into the name that they mention. So far, my year-to-date investment performance is extremely impressive. I've gotten the same stock pick from about 25 different girls into a popular social media company. You may have heard of it before. So it started to become a more significant part of my net worth. Maybe I have about $30 billion across the social media stocks, but I've basically tripled my money so far this year. It's looking pretty good. I'm confident that if I continue to follow this Tinder stock picking strategy for the next 3 to 4 years, I will certainly be the world's first trillionaire. However, I will no longer have a wife because of all the time that I'll have to be spending on Tinder, so she'll get half of that, meaning I'll be down to about 500 billion, which I will just not be satisfied with whatsoever. When that does happen though, I will have quit my job and I will be giving all of you on this YouTube channel those stock picks so that you can become trillionaires all on your own. And as always, thanks for watching.